Assalamu alaikum everyone. This is the third part of the demonstration problem of chapter 12 of Williams, Haka, Bettner, and Meigs. The chapter was income and changes in retained earnings. In the first two parts, I've already shown you how to do the journal entries. And in this part, I will first do the calculate the weighted average cost of capital, second, make an income statement, and third, calculate the earnings per share. Okay, the task that we are given is to prepare the lower section of the income statement, beginning from the extraordinary items. Once we are done with this, then we have to show the EPS. And the EPS has to be determined with using the weighted average number of shares outstanding. So the first thing we will do is we'll start by calculating the weighted average number of shares outstanding. If you remember from the question, on December 31st, 2010, 40,000 shares were outstanding. Then on March 31st, there was a 5-for-4 stock split. A 5-for-4 stock split turned every 4 shares into 5 shares. So the 40,000 common shares turned into 50,000 common shares. However, for all practical purposes, those 40,000 shares at the start of the year and the 50,000 shares on March 31st were same. They had the same amount of capital. You're just printing more number of stocks, a different number of stock at a different par value, but the equity behind them is same. So we can simply say that 50,000 shares were held from January to March. From January to March, this is 3 months. And in terms of years, this is equal to 3 divided by 12 or 0.25 years. So these are the first shares held. Then on April 1st, the company purchased 2,000 shares. So on March 31st or April 1st, the company repurchased 2,000 shares. When the company repurchased the 2,000 shares, the number of shares outstanding in the market are only 48,000 now because 2,000 are bought back. So from April 1st till July 1st, when another transaction took place, that's another 3 months with the R 0.25 years. The shares outstanding in the market are only 48,000. Following this, in July, 2 things happened. 1,000 of the 2,000 treasury stock was sold, and another 20,000 shares were sold. So that's a sale of 21,000 in July. So essentially, 48,000 plus 21,000 is 69,000 shares, which were outstanding by the end of by 1st July. So from July 1st till the end of December, because no other shares were issued by the company, till December 1st, the total number of shares outstanding is 69,000. From July 1st to December 31st, that's 6 months, and 6 divided by 12, we can express this in years as 0.5. Now, what is the weighted number of shares? So 50,000 shares and with a weight of 0.25, the years. So for 0.25 of a year, we have 50,000 shares. Then we have 48,000 shares for another 0.25 years, and we have 69,000 shares for half a year. So now we have the weighted number of shares in each part of the year. To find the total number of weighted average number of shares outstanding, add all these weighted number of shares. So that's 59,000. On average, the company had 59,000 shares throughout the year. That's the first part. We have found the weighted average number of shares outstanding. The second part is making the partial income statement. Remember, as I told you, partial income statement or any other income statement, please write the format first, because otherwise you can't tell what statement are you preparing, what is the company, and for what period. So we have to express all 3 things. So making the format, Now we just have to plug in the values. So from the question, we know the net income of the for the year ended December 31st amounted to 173,000. So net income for the year was 173,000. After an extraordinary loss of 47,400. So a loss of 47,400. Now, if you know the net amount, you know the extraordinary amount, can you find the income before extraordinary items? So income before extraordinary items minus the extraordinary loss is equal to net income. To find the income before extraordinary items, you have to add uh, extraordinary loss to the net income. Since this is a minus sign, if I want to add, I'll have to use a minus sign as well. So net income minus of this loss. If it was a gain, I would have simply added it. So income before extraordinary items is 220,400. So we have the lower income statement expressed in dollars for the total company. Now to calculate the earnings per share, the income before extraordinary items in per share amount is equal to the 220,400 divided by 59,000 weighted average number of shares outstanding. So that's before extraordinary items, the company generated $3.74 of income per share. Now for the second part, 47,400 loss divided by 59,000. It's a loss of 0.8 per share, and then EPS, the net income of 173,000 divided by the weighted average outstanding. So that's 2.93. The EPS of the company is 2.93. Please like the video if you understand the concepts. Thank you.